you're not going to be able to move. So just have 2 or 3. That should be good enough for you. And just make sure that you look at the signals well and you know how to interpret them and the different types of market conditions. So we use those 3.
Thank you. Our second question for Chairman, Ryan is asking, when in placing your stops, do you sell at the end of the day or do you immediately sell once the price hits your cut point? How do you prevent being whipsawed or being victims of fake breakdowns?
Very good question. What I normally do is I just focus on price. So in other words, if I'm entering an order, I will also enter my exit. So that I have I understand the Ryan's question is that because of the volatility sometimes in the market makers will touch your stops, right? So it will be a false breakout on the top side to enter, and then it will fade immediately. Depends on market condition. If the market is like we said, is in a quadrant 2, it's a strong bull like last year. There's no hesitation to put my buy stop in. I will put my buy stop in immediately, right? And then also I'll put once it's entered, I will basically put my stops at the what we call a scratch zone or a cut loss zone. It's always price, meaning I put it in. I don't have to because I don't really have time to watch it minute by minute. So what I do is that depends on market condition. The problem is that when the market conditions is like today, which is a quadrant 3 in the US, which is what we call a weak bull, then you really have to be very careful, because what happens is that it will have a false breakout, it will fade, and then goes new high. So you need to be very careful with your buy stops. But of course, we'd always compute our stop loss. But in a weak bull, based on experience, if it breaks out and you're in, what I will do is that we wait for a few more minutes. Normally it's 15 minutes for it to quiet down. Then we enter it with the same stop at the bottom. The problem is once it starts moving, the market starts moving, you're talking about momentum trades. When it starts moving, I will now move my stops, my original stops, put it at the 5-minute fade prices so that I can minimize my losses, because the sentiment is on a overbought sentiment, which is a weak bull for me. So that's how I protect myself. May konting daya. Wait a minute. Konting daya is based on the market condition. Now, if it's a strong bull, or in an oversold condition, I can put my buy stop there without worrying too much. So depend on market condition talaga.
Thank you for that, Chairman. So we have another question from Ryan. This one is for Sir Juanes. Do you treat stocks the same way as REITs in terms of fundamental analysis and valuations?
Well, if you're talking about valuations, yes, but maybe not in trading. I mean, REITs should be considered more of a long-term type of investment. And since the ability for you is to buy that on the pressing yield that it will give you, I don't think you want to be moving in and out too fast like it were a normal stock. So the one you have to change your style to a little bit more of medium to longer term play so you can reap the benefits of what the dividends give. But I think on the valuations are still pretty much the same.
April is with us already.
April's here. She can complete that if she wants.
Hello. Yeah, on REITs, is that the question?
Yeah, should they treat REITs as they do regular stocks in terms of investing?
It's a little bit different. It's more, I mean, for example, it attracts, investors who are more for fixed income rather than capital appreciation. But that said, I mean, for example, a REIT went up substantially because I think when it IPO'd, the yield was really high, but now it's not anymore. But that said, I think it's between a stock and a fixed income product, because say a bond, the income is the same during the life of the bond, whereas for a REIT, for example, if I'm renting out properties, if the rental rates are going up, then I can expect higher dividends in the future. So I think it's a hybrid thing and more of a long-term, more stable dividends. So I had this interesting question from a REIT seminar that I conducted, and I think the question is, at this point in time, there are some stocks that are giving dividend yields that are higher than the REITs, because, for example, Ayala REIT now provides a dividend yield of 4+%, whereas you'd have several stocks like your PLDTs or the MCIs and even some power companies providing yields that are higher. Like, which one would be better? I think if you ask me, if you can stomach the volatility, maybe it's actually a good time to think of these stocks, because you have both capital appreciation and high dividend yields. And of course, our outlook really is for the economy to start recovering. And if that's the case, then of course we can expect the dividends to increase also, and for prices to go up. So that's my long answer to the short question.
Maybe you want to, April, you want to
Introduce. You want to give a short background of yourself, though.
Oh, is that?
A lot of
Sorry.
people may not be too familiar with you. That's why.
Yeah. Yeah, my name is April Itan. I head the research team. Well, yeah, I still do. But they changed my position to investor relations, chief investor relations and strategy. But yeah, I mean, I'm still part of the research team. I am the chief equity strategist for COL Financial.
Thank you for that description.
So April, how long have you been with me also?
Too long. It's a very long time. More than 20 years. But yeah, I'm not counting anymore.
So Juan is also more than 20 years, diba?
Yeah.
25?
Yeah, close to that.
Yeah, they'll know your age now. I want April is what, 10 years before. 10 years lang si April. So she looks like very young.
Yeah.
Okay. Our fourth question today is also from Ryan. This one is for you, Chairman. Globe's Vince Yamat hinted that GCash is eyeing a possible IPO. While no official confirmations have been made, can we expect this to have an impact on Globe? If the IPO pushes through, will it better to be participating in the IPO or buy Globe as the parent company?
I think April, you should answer that.
Yeah. Well, the thing is, it will take time. Sabi nila soon, but in all honesty, I think it will take time because they don't really need the money. And aside from that, of course, they want to get better valuation. So I think they're not going to do it yet. But will it benefit Globe? I think, of course, in the short term, before they list, it will benefit Globe as the parent company, because that's the only way you can participate anyway. But after it lists, of course, you buy GCash already. Yun lang, which is why we continue to recommend Globe, because I'm sure if you look at the chart, it's pangit, and then diba, it's a laggard, etc. But it has this subsidiary that I think is worth a lot of money. So that's the reason why we think you should stay invested in Globe. And of course, the dividend yields are very high, around 5% as well.
April, maybe you want to explain why it's never was included in the valuations for Globe. No? I mean, GCash is not included. So may jackpot, diba?
Yeah, it's not. Yeah, it's not. Our target prices actually don't include GCash because, for startups like this, the way you value them is mga price to sales, number of subscribers, etc. because they lose money. And how we value Globe, it's based on DCF. So in fact, because GCash is inside, it's negative pa because it's a cash draining business at this point. So the cash flows are actually negative from GCash. So yun. Tsaka yun na nga, also because it will take a while for the company to be listed. So the analysts are not including that yet in the fair value estimates. Yeah.
Yeah. But the nice thing about Globe is that they're paying you to wait. No? For example, because it's been underperforming for the last year, but then they're still paying out their 4 or 5% cash dividend. I think the surprise part is that if they don't, because there are huge capex that's coming out. I think that was from the interview between you and Ernest, no? The president. No?
Yeah.
So let's pray that they don't cut the dividends, the cash dividend. No? But because I think they're what
Huge
excluding
capex, yeah.
capex, almost more than 70 billion.
70
capex.
billion, yeah. But I don't think they will, because I think even Ayala Corp will complain. I think that's where they get most of their cash flow. So yeah, and the borrowing cost for them is so cheap anyway, and they can borrow US dollars. These US dollar loans are really so cheap. So for example, PLDT borrowed quite a bit, and they borrowed for as long as 30 years. So imagine you can borrow probably 1 to 2%, and that's a 30-year loan, no? So as far as they're concerned, it's cheaper for us to borrow rather than to cut our cash dividends. So yeah, that's how they think.
Okay, thank you. Thank you.
Thank you for that. Okay, moving on to the next question is a question from Anthony. Chairman, I think this one can be for you. Is there anything you can say about stock like GMA coming from 6 pesos to 13, which is its all-time high?
Well, as far as I'm concerned, when stocks are in momentum, in trends, when it's going beyond the intrinsic value or the fair value, I will always start to scale out and protect myself if I have the issue, because we don't chase prices, because if it's expensive, we don't chase it. Well, at least as far as I'm concerned, I can trade it, but I'm not going to. Meaning, I'll be watching it carefully because it has gone up a lot. So it's pricing in a lot of this how do you say this? It's beyond fair value already. Once it goes beyond fair value, then we have to wear our momentum hat, how to exit it when it starts rolling over.
Okay, thank you. Sir Juanes, a question for you from Zeril. What is your take on backdoor listing plays and how would you approach it?
Well, that becomes very difficult because in a backdoor listing, although you may have some historical prices to be able to use on the trading side, you have no real idea what's going on with the storyline, because majority of the time these are rumors. And some of these backdoor listings, you probably would hear for them months ahead, the reality of which will come out very much later, whether they will actually pursue it or not. I've seen companies that say backdoor, all of a sudden it's another company that does the backdoor. So you get a lot of different variables that can come inside here and cause a lot of volatility in the stock. So I don't think this should be a majority focus of traders who understand what they're doing, because if you be going into these things, you gamble and you fall out of control of the trade because there's nothing for you to be able to rely on. I mean, one day the storyline can be there, next day it may not be. Now, when you're coming already towards a part where people have already accepted there's probably going to be a backdoor, more likely there will probably be patterns being shaped into the charts already, and because perhaps there's already a following or good demand coming in, and perhaps there that you might be able to have something much more viable for yourself. Unfortunately, as the truth comes out, volatility will die down, right? So the exciting part will be over. So a lot of people who like buying all these, let's call it these small cap stocks that run, they really are very volatile when people don't know what to expect yet. But the minute the truth comes out and people know, and you can actually start computing valuations, things will slow down. So you have to understand which side of that cycle you're on.
Pricing in, no? It's pricing in.
Yeah.
Because I've been receiving a lot of calls asking me what's going on with Erber Tesco,
Yeah.
right? So it's being speculated right now. So you guys just have to manage it and start scaling out. Once it starts rolling over, once it becomes volatile, you have to get out already. If not, what will happen is that you'll be left holding the bag.
Yeah.
Okay.
Understand that maybe 9 out of 10 of those companies that do this normally implode. So that's not a good stat for you to be on in your side. So like Edward said, minute your readings are extremely overbought already and you can see a little tapering in momentum, lumabas na kayo.
Thank you for that, Juanes. I hope that answers your question, Zero. Next, we have a question for Ma'am April. What is a short squeeze and what is the logic behind it?
Actually, I think mas kaya ni Juan yung sagutin niya.
Yeah.
But anyway, I'll try my best to answer it. For example, if somebody is shorting a stock, you know naman short means you sell a stock that you don't own, right? So yun, if say I'm a fundamentalist and I feel like the stock is too expensive or I feel like, well, it doesn't deserve to trade at a certain level, so I sell it because I expect the price to go down. The problem is, of course, you have yung mga, for example, the retail investors, like what happened to GameStop, who all of a sudden they decide to come in and buy the stock. The problem kasi when you short, your potential loss is infinite, diba? Kasi what if the price goes up substantially? So what will happen, for example, if the price goes up for no matter what reason, even if it's speculation or these retail traders come in, etc., and you're shorting the stock, you're gonna get worried na malulugi ka ng malaki. So when the price goes up, there's what you call a short squeeze because you end up covering it, and also because sometimes there will be a margin call. That's more complicated to explain, but in short, your broker is telling you, hey, you have a loan, you have to pay up, and you have no way of paying up unless you close your position because you sold something that you don't own. Parang may, diba? Maybe Juanes or Boss Edward can explain it more.
Honest?
Okay,
You have
so,
a-
yeah, April's right. But Taria, like she said, a short squeeze is when one side of the market, that means the shorts who are betting that the market will continue to go down, are put under pressure because of a number of factors. One, prices could be rallying big and that stomping on the short seller and causing certain losses, of which, like she said, if it is a margin condition, they're forced to buy it back. Second, there could be a limitation on the end of the short to be able to leave his short out there as a short position, because that's part of the clause when you borrow shares, and if the original owner wants to be able to get his shares back, you're going to have to be able to cover it. Third situation is your projection for a downside move of the market fails. For example, what happened to the foreigners here just recently, they've been selling and shorting the Philippine positions, thinking the Philippines is going down the drain. And when our rally started to manifest, they couldn't buy their positions fast enough, and they had no choice, but they had to be able to accelerate their buying program to close the shorts. And they were the ones that made our market climb up very, very big initially. But the latter portion of the rally is a different type of buying already. It's no longer short covering. But that's what happens, and it becomes a very difficult thing to manage. And that's why there's always been a negative perspective on shorts, especially here in the Philippines, although it's very common to do that in the other markets.
I think the question is very valid because the short squeeze really happened. The last 2-3 weeks that the market went up a lot is really a short squeeze from the foreign institutions, because what happened is that I think they were shorting the EPHE outside in the US, right? And from there, we can see how many days for them to be able to cover their shorts because of the illiquid markets here in the Philippines. So that's really a short squeeze. But let me share with you about my experiences. The people that I've seen that have shorted markets now. When markets are way overvalued, you will see a lot of these people coming out and participating in shorting in a very big way. Like what April and Juanes was explaining is that when you're shorting, it's an unlimited, it's an infinite. You can lose. It's an unlimited losses. And for example, the biggest problem with most short sellers is that it's an ego issue. You know, all those, they can be right some of the time, but most of the time they can blow up their accounts very, very fast. That's why, like for CTS, basically, we do not encourage shorting the markets. We do not encourage shorting the market, and I think I explained that already. In fact, we banned it last year when market had rallied. The initial rally, a lot of our traders were shorting the market, and immediately we spoke to the trading team and we told them to stop shorting the market already, which proven correct, because if we start shorting the market, the fundamentals, the setting was really so bad. And you will always look at things wherein you think that it's going to go down, but then the market continues to be going up till today. You know, if you're shorting, you're still going to lose money. And the most of the big time shorts, like for example, if you go to the YouTube channel or to Google it, you would see that a lot of these big time short sellers eventually committed suicide. A lot of them, big industrialists, whatever. They even I think even the best trader in the world, the boy planter, which is Jesse Livermore, he also committed suicide because because they're only. That's why we always talk about managing risk management. The last that we have seen was during the crisis of I think 2008 2009, something like that. It's a German industrialist, shorted Volkswagen. In fact, he committed suicide. Adolf Merkel. You can Google it. You can see it. The stock went to the moon. The whole market was going down, except one stock. The stock that he shorted, Volkswagen. I think that was in 2008 or 2010, wherein the whole market was collapsing, but there's only one stock that's going up. The day that he covered, the market just went down 30, 40, 50%. So you need to be very careful. For those who are very smart, I think most short sellers are basically the smartest people in the world. And they will think that because it's how do you say this? It's the valuations is just too extreme. No? So like for the latest, of course, are all the short sellers in Reddit. Is it Reddit?
The GameStop.
Yeah, and so far they've been squeezing all the short sellers. No? So just need to be very careful when you're shorting markets. A lot of short squeeze, like what the guy was asking. Okay.
Okay. Thank you for all your answers. So our 8th question is for the chairman from Zeril again. What usually happens in the markets after presidential elections, and why does the market react that way, if so?
April, do you have statistics on all these presidential cycles?
I think what they say is it's negative because during the start, diba, that's when the presidents do the hard things, the unpopular things, kasi naboto na siya. And then when towards the end of the term, well, at least in the US, diba, they run for re-election, etc. So then that's the time they spend on pump priming, at least for the US. No? For the Philippines, parang wala naman akong, I don't really remember any particular trend. No, it depends, because for example, the last midterm election, remember the issue was the budget was delayed. So theoretically speaking, dapat during the campaign period, a lot of infrastructure, a lot of campaign spending, etc. But since the budget was delayed, edi wala. So it's hard, diba?
I think the presentation of Jason's lecture the other day is very, very powerful. Just the word is don't fight the Fed. If the Fed is putting money into the system, you have to stay long. Whatever crisis that we're going into, depending on the Fed. If the Fed is basically dovish, you have to hold on to the market. What has been happening the last 2 days of volatility is because the Fed is already now sending messages that in the next year or 2 years from now, they will start to normalize the interest rates. No? Because it has been zero negative interest rates for the last 2 to 3 years. So once they're now talking about it already, and then I think that's the last, I think more than 10, 20 years already. Like before, they'll give you a lot of surprises. Today, the Fed, they don't do that anymore. They will start sending signals so that they can try to manage the drop of the market. Because as interest rates goes up, like anything, there will be volatility in the market. So, but don't worry if they are normalizing. And what will happen is that they'll increase interest rates, and then the market will go down, and then the market will rally again. Because when they're increasing interest rate, that means the economy is recovering. The economy is recovering. So it's a step up, slow step up of normalizing. Of course, until the last, then you'll have a big down move. No, normally, if you look at the what was shown also is that as interest rates goes up, that means the economy going forward is recovering. That's why they're more aggressively in trying to increase interest rates, right? The short-term interest rates, normalizing it now. So don't be afraid because it's pricing in already. If they increase it, they might have a sell-off and then rally na naman yan. So don't think that normalizing interest rate is positive, but it's not negative. It's just that you will see some volatility in the market lang.
Yeah.
But after the sell-off, akit na naman yan. Of course, until they hit its peak, which is now I'm talking about 2.5%, 3% normalization of the interest rates. So don't worry too much about it. Because like us, for example, it's pricing in already. When they're talking about it, before, imagine they talk about it, we'll sell the market first, right? And then as they act on it, then when market goes down, then you want to be buying it. So it's a pricing in the as they normalize it. I hope I answered the question. Juanis, maybe you want to add something?
Are we going to talk about the normalization or the
Well, like
presidential?
He's asking about the questions about. You see what was the question again?
The presidential election.
Presidential election. I don't know.
Yeah.
So we had a side bet yesterday. Who's going to be the president and who's going to be the vice president? 100 pesos lang.
Okay. And what was the standout answer?
3 for Sara Duterte, and then 1 for Isko. So I don't know. We know. We'll have 1 year later. We'll know.
Isko.
Right?
Oh, okay.
Yeah.
I didn't even know he was running. I thought they were trying to bank Romualdez.
Martin, yeah. Well, I don't know. I know, but that's the side bet. It's a side bet kung sino as the president, who is going to be the vice president.
Okay.
I think so. It will be interesting, but it's not going to affect the market. Personally,
No big change if that's going to be the case.
Yeah.
Okay, thank you for your answers. So this next question is for you, Sir Juanes. When in life did you realize that the stock market industry is for you?
Maybe after taking my first trade, because I didn't trade right away when I got in. Because to tell you frankly, I did not want to come into the stock market. I was pushed in here, like Edward said, by him and my father. And I had my mind set on becoming a teacher in school, and all of a sudden I found myself, chairman said, please report to the trading floor first thing on Monday. And I did so. I wore a suit, walked in there. Everybody was looking at me, wondering how come I was the only one in a suit. And I saw prices going up and down. People seemed to know what was going on, but I didn't. And so really, it was a system shock for me. It took me a couple of months to be able to get my bearings straight. And maybe after the third month was the only time I felt confident about at least trying my first investment. And I bought ABS-CBN. I happened to have bought that right before a stock dividend, and I bought it. When the dividend came out, the stock price made an adjustment down. Then I got so scared that I lost so much money, only to find out that the shares came in, about a month later. And when I saw that I made quite a bit in that first transaction, I said, why isn't everybody in here? All right. And I was hooked. And then, of course, applying the technicals, which I knew in concept, I didn't know how practical it was and how to be used. And that's something I had to learn by watching Edward, his other traders who were there at the time, and that just changed my life, and I couldn't leave anymore. I mean, it was just I felt that I was stuck inside here because it was one of the most interesting places to be.
Thank you. Chairman, Ma'am Eva, maybe you'd like to tell your story as well for when you realized the stock market industry was for you.
April, maybe.
Me, similar to Juanes, but I guess on a more nerdy perspective, no. Unlike in school, you learn something and then okay, so what? No, it's actually being able to earn money from what you know and from your diligence in doing research. But to tell you honestly, initially I was more like a pure fundamentalist. But then because of the influence of Juanes and Boss Edward, I'm now more of a, I guess it's more like respecting what the price is telling you. You can't be a pure fundamentalist, and sina boss naman, they're becoming more of a fundamentalist from being pure traders. So I guess there's a role of fundamentals and technicals, and so I guess the question is, so why are you with COL and why haven't you left? Because, well, for me, I like it that because when you go to other brokers, being an analyst, for example, is just a career. You're discouraged from investing. And as Juan said, when you do your first trade and you make money, and of course, for an analyst like me who used a little bit of fundamentals of what I know, and actually I'm able to make money from it, it's different versus, say, just getting a paycheck because people use what you know to make money for themselves, no? Sa akin yun and with COL Financial, you actually see people doing that, using what they know to make money, and you being allowed to do that as well. So I think those two factors are the reasons why I'm here, and of course having same values as the people who work here.
Chairman, would you like to weigh in also?
Well, the funny part is that last night I was having a dinner with my mentor, who introduced me to the stock market. I was explaining that to one of the CEOs that he was my mentor because he came from London School of Economics, and he exposed me to the technical analysis of stock trends by Edwards and McGee. We were just joking about it last night. And because he was our mentor from the NGO, the teaching young kids to become entrepreneurs. I think it was Junior Achievement of the Philippines. So we're just talking about. When I went to his office and I see all these charts, and then I opened an account and started participating, I was hooked. So it was a lot of entertainment. I mean, one day you make money, one day you lose money. So it excites me. And of course, 1973 was a bull market, so I was doing very well until the 1974 crash came and it wiped me all out. So it was a very, very interesting experience. And then I had to start working for 8 pesos a day and as a key puncher, verifier, and started learning how to do this properly. And after 40 plus years, I'm still learning. But when I see prices goes up and down, I'm happy. It's a lot of entertainment. What we're doing is that, in fact, we were talking about this with April, and then April was sharing with you that I became more fundamentalist, which is true. Because I really believe that to increase your probability, you have to basically know the sector you're going to, the companies that you go to, so that it will increase your return. So then, of course, it has to be confirmed by price, right? You need to confirm price. So in other words, or else it's going to be like a value trap. So these are the things that we're trying to share with you guys so that you'll understand it. Because I remember, I think I shared with you, there was a company that was really very, very cheap, and we participated in it. We bought 1 board seat, the price was still the same. Bought 2 board seats, the price was still the same. And it took 20 years before it was realized. From 2 pesos, we sold it at 280. I think it went to 6 pesos something after 20 years. So it's like a value trap talaga. So these things has to be confirmed by price. It can be cheap. It can be cheap. That's why it's for a reason. Until the major shareholder decided to do something about it, then you'll see their prices start moving up by liquidating a lot of their assets, converting it, be more dynamic. So there's always a checklist. There's always a checklist. But when I see prices goes up and down, I get hooked. That was the reason why I built it into a career.
Okay, thank you for your insights, panelists. This next question is for Ma'am April. What skills do I need to learn in college to be a successful stock market investor?
What skills? I don't know. Not just well, stock market investor or trader. But anyway, yung mga fundamentals, of course, it's accounting and finance. I think those are important. But yeah, I think it's more fun when you're actually, to tell you honestly, I hated finance when I was in school. Yeah, and also, but I loved economics, yan. But then, it's different kasi when you're learning finance and then they tell you, compute for the ganyan, compute for the ratio, parang, oh yeah, so what? I don't care. Pero when you compute for your financial ratios and it tells you a story on why a company is doing well, and you get excited about it and you actually end up buying the stock and you see the stock going up and you hear other people agreeing with you, that's different. Parang, diba? And the knowledge or the learnings that you have about finance actually sticks to you because you remember, oh, I made money on this stock because I had this conviction and I saw it that the company was actually earning better margins because of this new product, etc., or because of a certain strategy or because of certain economic conditions and mga economic life cycles, yung mga ganon. Nagiging realistic siya eh. Hindi yung mga, sige, test, tanong-tanong. Wala naman akong package dyan. So, I don't really care about those things. I'm not making money from them. But the moment you make money from, those things that you learn, then it becomes exciting. But that said, I guess one of the things that you learn from, to be successful really is, the soft skills. Humility, because the market will prove you. It's a very humbling place to be. Walang fried chicken dito. Even if you think you're right and the price goes down, then obviously you're wrong, right? So things like that. You have to be humble. And I guess communication skills and learning how to get along with other people, because of course you have to. It really helps when you get insights from other people and you talk to corporates. I guess if you're obnoxious, they don't want to talk to you either. So you got to make sure that you have your network, you have your friends, and the corporates will want to talk to you.
Chairman Sir Juanes, is there anything you would like to add on top of that?
Well, on my end, I think one of the important things you have to learn is don't ever close your eyes and ears, right? Markets are constantly giving you a lot of learning experiences. And to those people who don't learn them, it's only because you haven't looked at it or listened intently enough to be able to do it. I've been proven wrong by the market many times. And it becomes a shame on me when I let that happen more than twice or 3 times or 4 times, because after learning the painful lessons and paying for it with actual cash, you should be able to take yourself out from it and say, okay, I know better this time around. Now I have to be much more nimble. I have to be a bit more discerning. Now learn how to don't just be fixated on let's say on the hard skills you have, whether it's technical or fundamental. When the market's teaching you, you listen and you bend with the wind. And that will be your base to be able to rebound well and to learn from those lessons and adjust in the next learning experiences that you have. And like April is, I am not a diehard. I am a diehard technician, but I don't use 100% technical analysis all the time. right? And like she does, sometimes she will have to look into the technical aspect. On the same token, a technician will also have to look at the fundamental aspect, just like Boss Edward told you guys earlier. So keep your eyes and ears open. You will learn this as long as you allow yourself to be able to do so. And of course, like April said, don't be obnoxious, right? And markets. Once you get a chip over your shoulder and you think you're Superman, patay kayo. So listen and learn.
Yeah, it's the same with me. I've been humbled so many times, and this was I was listening to Ray Dalio, and he talks about the ego and the blind spot of most of us. No? So when you have a big ego, you have a lot of blind spots. There are a lot of things that you cannot see. That's why I was just sharing that last night, and I said to my mentor is that you need an accountability, you need a community, or you need an accountable partner, just to make sure that from time to time, they will check whether you're doing the right thing or not. If not, a lot of times we become very emotional when we make the wrong decision, and we are in denial. No? But like I always believe that whatever fundamentals you have, you better be confirmed by price. Without that, it will take you what we call the Ferris wheel. You just go up and down in circles. You make a lot of money, you lose a lot of money, make a lot of money. So I think I shared that with you guys, that you don't want to be that. No? You want to be a consistent trader. And the results has to be consistent. Yeah.
Yeah, thank you. So this next question is again for you, Chairman. Which industry are you most bullish on in the Philippines right now? And do you have any stock picks?
Yes, I have only just a few stock pick, and it's of course the new company. It's called Monde, which is a new IPO that came out. Great company. I did the checklist: people, product, potential, predictable. Great principles. In fact, I was just with him yesterday morning. I was talking to him why we're so positive about his company. And the best thing about it is that it's well, according to April, I checked with April, it's a fair value. It's cheap. It's cheap. Mura talaga. No? And then you have 1 year later on, they can be injected into the to the MSCI. Then hold it for a year or two. I think it's a very good company. The other one, of course, which we've been promoting for the last couple of years, is DNL. We like it also because DNL is a supply chain and they're very dynamic. They're now focusing and building a huge facility in Batangas. And once that facility is finished, I think that then it's a capex on their building capacity. So these are basically cheating that it's what we call it a cheating. You can see the future mainly because of the production capacity that they're building. Similar to Monde is also the same thing. They've raised 40-50 billion just to basically to increase their production, also to pay off their debt. It's primary issue. So I like both company. It's just consumer. The other one, of course, is recently is because of AP, because of Aboitiz Power. It has been sold down because of the MSCI deletion. It was deleted. So so because of that, it's completely deleted, and because maybe part of that is the ESG. So you can see huge capitulation that came in. Now we've seen a huge rally, 20% rally. So once it quiets down, I think the first quarter numbers is fantastic. Well, I think April have to correct me if I'm wrong. The second quarter will probably even be better, mainly because of the West End prices has gone up tremendously. So anytime profit taking comes in at this level, because we think the market is a little bit overbought, and we think that the whole emerging market might start consolidating, rolling over. I think good chance to be able to buy it at a much cheaper level. So what else? Well, of course, the Telephone and Globe, because of the underlying once that they pay you the dividends. I think 5-6% dividend from Telephone and Globe. We like it also because they're paying us to wait for them to monetize the GCash, monetize the Paymaya, because that's the future. The future. Yeah, I hope I answered the questions.
Okay, thank you. So we actually have just one last question before we move on to the before we start taking live questions from you guys. So this one is for Sir Juanes. What career options are available in the industry, and how do I work towards them at the college level?
That depends on what you want to do into the securities business. I mean, you can become an analyst, and then analyst, you know, you can be fundamentalist or a technician, you can be a trader, you can even work as a clerk or whatever it is. But if you're talking about trying to become an investor for our line of work, maybe you want to start off as an analyst first while you learn the ropes, if not a trader, and you learn the two sides of that. Because I think a trader who doesn't know how to do any analysis might have a tough time. I mean, and like Edward said, you'll exist in a circular world where your money, one day you make money, one day you lose it, because your mind's not geared on doing what the proper assessment of the investment is. So you really have to get focused on that. And I will tell you, perhaps the big money you will ever make will really be on sitting a position for while the fundamentals back you up. Right? You don't have to be, just because you're a trader doesn't mean that you have to relinquish a position through and through. You can just buy, you can have a core position and buy it up and down, and a trader can be able to do that. Now, unfortunately, a trader is a horizontal job because your focus is on your own dynamic. You're not here to go up a corporate ladder. You're here to make money for yourself. And so the career path of a trader is quite limited. Unless, of course, you're an analyst, in which case that could change. I mean, you start off as an analyst, you can work yourself up to a better, you can become a portfolio manager eventually, and who knows, one day you could probably be running your own investment company or brokerage firm. So you have a bit more vertical aspect in something like that.
Thank you for that, Sir Juanes. So that wraps up all our questions that were posted on the Facebook group. Thank you again to all those who sent them in advance. Now we will be opening the floor to your live questions, and also we will be taking them on a first come first serve basis so that everyone gets a fair chance to ask their questions. If you would like to direct a question to a specific panelist, please feel free to do so. But if not, let's continue to answer the questions in the same order as earlier, starting with Sir Juanes, then Ma'am April, then Chairman. So kindly raise your hand and we will call on you accordingly. Marco, please go ahead.
Hello. So what do you do if, like, for example, a stock is already a bit oversold, but the fundamentals back it up and it's still relatively cheap? So, like, for example, Ginebra is almost RSI 80, but it's still relatively cheap with a EPS of around 10, and it's backed up with like almost double earning growth. Should you hold or continue to scale out of the position already?
Ma'am April, would you like to continue where we left off first?
I don't know enough kasi about that stock to make a recommendation because we don't cover it. So I don't know. Maybe Juanes or Boss Edward can say something.
Well, if you look at it, I will assume what you said is all built in, okay? Because I heard you say that, let's say, assuming the company's fundamentals inside, but the stock is oversold. So if you're going to be taking a chance to be able to buy a stock like that, you have to be prepared to wait. Because the reason you're using yourself to get in is a fundamental one. And that doesn't mean it's a timing issue. So that would mean that it could take some time for you to be right. Right? But I hope that you've managed to do your fundamental job well, because it might be a value trap, like you pointed out. And if you were to be able to engage a stock like that, it might stay that way for a little while. And who knows how long it will take before it would start to reap the benefits, where other investors can see the potential value of that and eventually encourage a rally. So you might have to be prepared to wait. I guess that's a downside of not using fundamentals and technicals together in your trading system, right? Because you will compromise one, something has to give on the other end. In this case, it's going to be time.
I think the question is, I think it's not oversold. It has gone up so much already for Ginebra. So if you look at Ginebra,
I heard him say oversold.
Yeah, I know, but I think he meant probably
overbought. Okay.
Overbought.
Right. Okay.
Tama ba?
Yes, it's overbought already, but the fundamentals still kind of support it.
Okay.
Kasi it's gone up a lot.
So
Diba? So
then we adjust. So what happens is that in a case like that I think that's quite a common situation. You have a lot of issues doing that right now. So in other words, you've just had a big rally into a market. Some issues could still be valuable at even as of this rally, but you're in overbought condition. So what does that mean? You've now generated a host of society who is now enabled to make a lot of money because of that big rush. And some people will start taking that profit, which causes the corrections to come in. So if your view here is you're talking about 6 months, 1 year, 2 years down the road, your option is either you hold your position through and through, or if you're a trader, you take a portion of your position down, take your profits just in case you get a big size correction. And with the amount that you get to raise, you can always use that to buy back in a nice, more decent price. So use that. That's on your advantage because you're the one making the money and you still have the core position that can sit in there just in case prices continue to move higher.
Marco, you just have to be careful when you're doing your own valuations, no? Because because you have to remember the target price basically can move it, right? So what we do is that when prices are already moving in 60 degrees or 90 degrees, what I normally do is I use a 20-day moving average basically to take me out if it's a momentum issue. Yeah. Let's say it's momentum issue. It's a 90 degrees, right? It's moving up very fast. I use the 20-day EMA to take me out. The first portion, and then I use, because if the valuations is still cheap, let's say you feel it's still cheap, what will happen is I will use the 50-day and 100-day to do it.
Buyback.
So buyback lang. So for a swing trading, that's what I do. So using a momentum to exit, which is I use a 20-day, but break on 20 days, I'll zero out myself. And I wait for it to, because if it breaks 20 days, that means it's going to go to 50 or 100 day. And I use the swing trading already. That's major support. When it's quieting down, you want to be participating because your fair value is still high, diba? So you do a lot of swing trading during those proportions. But once it breaks 100 day, I'm out of the market completely. I will get out of the market because I try to buy it, let's say at the 100 or 50 day, right? And then yeah, if it breaks, then I'm out of the market. Because the fundamental can change because it could be coming from a higher base, and then, so your earnings will probably start slowing down already, right? Because the reason why those numbers have the stock's gone up is because of their earnings. The earnings kicks in, because of the pandemic. More people are using it. Or they have a new product that creating a lot of businesses sales during this pandemic. So just use 20-day to take you out. And then when you still feel that the numbers are still growing, right? So profit taking comes in, you need to be buying it at a major support at 50 or 100-day moving average now. And then wait for, so it's a buy low, because after a major rise, you will see profit taking coming in it, right? So you try to buy, support, sell at resistance. It's like a range trading. Just make sure that there's enough margin for you to pay your commissions and taxes because you have a cost. There's a big cost. Unlike in the US, cost is very minimal, but in the Philippines, it's more expensive because if you keep on churning it, then it might not be able to cover your costs.
Thank you. Kobe, do you have a question?
Yeah, actually, I wanted to ask some of the analysts here, because I read the COL's report. Was it yesterday? I think it was yesterday, about the economic recovery, and it's, we might be on the path to recovery now. But at the same time, there's also the issue of the Fed mentioning that they plan to normalize interest rates a bit sooner than we expected. So how would that affect our outlook for the Philippine market? Like, should we, like, do we as Sir Edward said, are we going to expect more swing trading, or are we close to perhaps a new bull run, so to speak, since recovery and so on. Although there remains not a headwind about interest rates.
Should I answer that?
Go ahead.
Yes,
Yeah. So the view is, I think definitely we're on a recovery and the market should be trending higher. The problem is, of course, you have short-term issues like the Fed. So probably it's not going to go up in a straight line. That's all we have to say. And I think another thing that I would like to point out is that although it's recovering, it's not an exciting type of recovery, which is why it doesn't really attract a lot of attention. And parang very early stages. But I think in general, the trend is going to go up because if you think about it, last year was really bad. So no matter what happens, we're really gonna improve na this year. And of course, the vaccination process is picking up steam. So the economy will reopen. Therefore, parang, well, medyo cliche, pero I guess the only way is up, yun na. And valuations are still cheap at this stage. So I'm more positive rather than negative, but in the short term, there could be some factors that could lead the market to go down. But I think it's more of a short term rather than a long term correction.
Would anyone like to add on to that? Chairman, Sir Juanes?
honest.
All right. I shared the opinion with April that I'm actually more bullish than I was a few months ago. However, technical analysis will teach you that trends have to rise as if they were a step ladder. And some of these stocks have just gone up quite a sharp amount. And because of that, it's got to pay the price. And pit stops are going to be a factor for life moving forward. We're not coming off a short covering situation anymore. And that would mean that the pullbacks will probably show much more spreads. You get a little bit more wider. And like Edward said, you're going to be watching your 20, 50, 100-day moving averages and use that to be able to look for your potential entries. Because, for example, if you looked at issues like your BDO, your Metro Bank, your ASEN, Jollibee, you're going to issues that have climbed up at ridiculous distances right away. And their spread between the price and the 20-day moving averages in some cases are very, very far. So how can you expect the price to be able to just continue to stay up there? Prices have no choice. They're going to come back down and you're going to see that. But it doesn't mean that the story ends, right? What you're just simply doing is you're fixing an overbought situation in the market. So don't get panicked that you do see corrections, because that's part of our life over here. And as April said, if your view now is that we're in a recovery streak, that would mean that you should use these as opportunities to be able to get yourself back at better values, right? Rather than pay ridiculous prices after a very, very big surge. So welcome these pauses, because they'll be your opportunities for new entries.
I think the challenge always in the stock market is that excuse me, when prices are going down, it scares a lot of people. And as prices start moving up, then it attracts a lot of people to participate. So that's why you need to understand where you are. When prices are being depressed irrationally, you should be participating. And as prices starts running, you should be taking money off the table, especially in our market condition, which is, we still feel it's still in a quadrant one, which is a weak bear. So it's a buy low, sell high, especially on those issues that are in the index. So you've seen a lot of these companies, yes, still cheap, but it rallied a lot. So you want to take some money off the table. Buy low, sell high lang. This is a buy low, sell high strategy. But you can't be too negative because we believe that interest rate is still cheap, even if they normalize it. And any pullback is an opportunity, especially in the Philippine market. Because like April said, the valuations are cheap talaga. So buy low, sell high tayo. This market is not gonna run away. It's not gonna run away until the vaccination, the herd immunity is there. Especially now, you're seeing now there are now the new variants basically are also creating some problems now, even for countries that are being vaccinated. So we still have to be very careful with the protocol. You have to make sure that wear a mask. Well, I'm not wearing a mask, but wear a mask. The other three are wearing a mask, so wear a mask, wash hands, and social distance as much as you can.
Okay, thank you for that. Kobe, go ahead.
Yeah, sorry, Alvin. Another question lang, if that's okay. It's a rather unrelated question. This one's about REITs. REITs have been quite a trend lately, and I've just been wondering how that affects perhaps the companies that are issuing these REITs, right? Because they're transferring the ownership. If I understand correctly, they're transferring the ownership of some of those properties into those REITs, and so wouldn't that have the effect of depriving the initial companies, Ayala Land and so on, depriving those companies of the profits from those properties? So when a REIT is announced and when properties are transferred to REITs, how should we approach perhaps our valuation? How should we approach the property companies when they make a REIT or whenever they transfer properties from their company to the REIT?
Yeah,
I
I
asked
can
April
answer.
that question the other
Yeah,
day.
I can
And
answer
she said,
that.
put more money.
No. Kasi okay, ganito to First of all, when you transfer your property to a REIT, um, the valuation is much higher than, say, construction cost. Kasi you would think that, for example, if it takes me, say, 30,000 per square meter to build a building, when I transfer it to a REIT, I don't transfer it at 30,000 per square. I transfer it based on how much it's earning for me, and I use a very low yield of 5 to 6%. So in that respect, when you transfer it, meron ka ng kinitang extra money. Yeah. And secondly, you have to remember, okay, usually when they sell the building to the REIT, they don't sell the land. So they're still earning rent on the land. And then the stake usually that they sell they still own like 60% because the minimum float of the REIT is 33%. So they still own like 60+%. So theoretically speaking, nawala yung 33, diba? But remember, if you're a REIT, you don't have to pay taxes, which is at 25%. So so essentially konti lang yung mawawala. But again, you're paying rent to the say a REIT pays rent to Ayala Land on the land. Aside from that, they charge management fee and fund management fee. Iba pa yung fund management saka sa property management fee. So that's around a total of 3 to 5% pa on the revenue. So net maybe they lose a little bit, pero they get a lot more cash, and then they can use the cash to do other things, recycled capital. So I think it's more positive for property companies rather than negative. And of course, they get a higher valuation because yun na nga, when you value a REIT, usually you look at the dividends, and if it's high and the rent is expected to continue to go up, medyo stable, the buildings are valued at a very high level. So it's really good for the property companies, whereas right now you have a lot of listed companies trading below 10 times PE. Parang hindi masyado na-appreciate ng market.
Oh, so April, can I add to a question? That way you can satisfy my question too.
Yeah.
So let's say you had ₱1 million and I had it all in Ayala Land, and the REIT was coming out. What would you suggest I do with my 1 million holdings in Ayala Land? And assuming I don't have much to put on more.
In today's environment, to tell you honestly, I'm not as bullish on REITs today as I was last year, because, for example, a REIT, the yield is 4+% na lang. It's not as high as it used to be, because when they listed, di ba mga 6 yan eh. But But
Yeah.
now
5.5 to 6.
it's not as high. You know, they're smart because they know that the market will accept the 4%, 4 plus. So they'll give you 4 plus. They won't give you anything more. So I mean, I'm not as bullish. And when on the other hand, there are so many stocks that are giving you similar levels of dividends plus capital appreciation, plus of course, you know, the economy is recovering. So I'd rather buy high dividend yielding stocks and, you know, just stomach the volatility unless I need guaranteed income on, you know, and potentially some liquidity. So I treat the REIT more like a fixed income rather than a stock. But if I can stomach the volatility and I can wait, then I'd rather buy a high dividend yielding stock at this moment in time.
So does that mean you're going to make me shift from my Ayala land to the A-REIT?
No, I don't like na nga eh.
So you won't. So I'll stay only invested in Ayala land.
Yeah, unless you need the cash flow, you know.
Okay.
I think the other day we were with another company, land company, and that was what he said basically is that eventually that company is going to be a holding company as they put all the REIT out, most of the buildings on REIT. Yeah. So you will always, then it will become a holding company. So when you're a holding company, it becomes a holding company discount.
Discount.
That's a challenge. That's really the challenge. So just remember, a REIT we treat it as a fixed income product rather than as a. So you have to go for that yield, no? Because a lot of few more REIT are coming out, and it's promising more than I think 5.5, 6%. So if you need that regular income, dividend income, then you need to switch it. If you have Ayala REIT, then you have to switch it to the new ones that are coming out that are paying higher. Paying higher. Kobe, I hope we answer your question.
Yes, thank you.
Okay, thank you. Sorry, before we continue, just a friendly reminder to everyone who's sending their questions on the chat to kindly raise your hand instead so that everyone has an equal opportunity to ask their questions. Thank you. Alvin, please go ahead.
Yeah, so a question for anyone now. Over your experience in many market cycles, have they become slightly more predictable, like easier to understand as you see the different factors coming out? And then follow-up question would be, what's the one market crash that was parang most unpredictable, like out of the blue?
April, mauna ka na.
Una na ako. Syempre naman, no? After going through so many cycles, syempre matututo ka. You won't be as scared. As a fundamentalist also, okay, our problem usually is being too early. Yan. So you appreciate more the timing na, you know, the likelihood of value traps and stuff. And I think okay, what's the difference this time around? In the past, okay, one of the things that I didn't realize when I was a young analyst was the importance of cash flow, tsaka yung debts, no? So nowadays, when you know, the first thing that we do when there's a crisis is look at all the listed companies we cover and check who is highly indebted and who has debts that are maturing this very year, because those are major issues. When the market crashes, you don't know if the banks will lend you money and if you can borrow money at a good rate. And of course, you don't know how bad will become. So if a company is highly leveraged, you don't want to, you know, you don't want to buy that. So that's one of the things that we learned. So what's the most unpredictable? Of course, this one, the pandemic, because this is a first. Usually, you'd have the past two crises, for example, happened because there was a, you know, over leveraged, yun na nga, mga too much borrowings, a bubble. But this time around, during this pandemic, it's a pandemic-driven crash. You didn't have over-leveraged companies, so that was different. And secondly, the speed at which the central banks responded, that's also unprecedented, because in the past they wouldn't. They just let it be, and then after a while they'll come in and then they'll cut interest rates. But this time around, the speed at which they responded and the magnitude of the bailouts through the easy monetary policy was unprecedented. This is the first time actually that we've had a crisis where interest rates actually went down. In the past, they'd always go up. So it's different in that respect, no? Yeah. So Juanes, you want to add something?
Well, I think April pretty much said most of it. Of course, you end up learning a lot every time you go through a cycle. In this particular case, as she pointed out, there was a lot of new stuff that took place because of the pandemic. So it was not your standard, explosion, because there was some bloatedness somewhere, as she mentioned earlier too. And like I said earlier, you just have to be able to understand what the circumstances are, how to be able to adjust accordingly. And does it get easier? I think is what you ask. And I said, maybe yes, because of the learnings that you have. But the market still finds ways sometimes to surprise us. And that's why I said, we're constantly learning. Don't ever, believe that you've learned everything and that you can do everything on your own. I mean, it's always nice to have and listen to opinions outside, but of course you have to filter them. Yeah, I think that the experience that you get can be quite valuable to be able to move on, because majority of the time the cycles are kind of the same, right? So they tend to repeat themselves over, and so you know what to do. And like she said, you can even predict rates. Normally, if a crisis comes, you get a lower rates to be able to stimulate what we're doing through right now. And so you tend to be able to understand some of these variables. But
yeah,
like I said, not all the time, right?
I want to add lang na, for example, during the global financial crisis, actually, if you watch, what's that show ba? Yung palabas. But anyway, there were signs already of the bubble forming.
CNBC.
But, no, Big Short ba yun? Or...
Oh, okay, the movie.
Yeah, the movie.
Yeah.
So, you could have been early because the signs were there, except that you didn't know what was gonna trigger it.
Yeah.
No? So yeah, may mga ganong instances eh. So in that respect, parang you just have to be vigilant, because I mean the signs could be there. Okay, and another thing I want to say, for example, right now people have been talking about the US now no longer being the reserve currency, which is why Bitcoin, yung mga ganong usu-usuhan. But they've been talking about that for 20 years. How the US is no longer going to be the reserve currency because they keep on borrowing, interest rates are too low, etc., etc. So, maraming mga ganong pangyayari sa market. But I guess you just have to be vigilant. Anything can happen. But at the same time, I mean, don't be too proud.
Yeah, just to give some, the signs are always there. In fact, when we were educating people in 2005, 6, 7, I remember April, we were in the market briefing, and we showed that the market is going to break down already in July. I think I remember that. Then in January, we had another session, and we were telling people to get out already. It's last chance for them to get out. And of course, when you're doing well, when most people are doing well from 2005, 6, 7, you become very more aggressive because you're making money. And when people are warning you already to get out, you probably will be more hesitant. The sad part is when the crash starts, when the big volatility comes in. I think in July 2007, when the volatility, or 2007, when the volatility came in before the crisis was announced, later part in 2007. You now, because you've seen it for 2, 4, 5, 6, 7, it's always sell off, rally, sell off, rally. So when volatility comes in, you think that it's just a minor correction, so you probably will still not start lightening up. And in fact, in July, it was true because it rallied all the way to new high in January 2008. And I remember we were in the briefing and we said that this is the last chance for you to get out. Of course, nobody was listening until the crisis came in 2000. I think in August, October, wherein all the major banks like Merrill Lynch has to be taken over. Bear Stearns all the big major firms, all my favorite firms, Merrill Lynch, Bear Stearns, Lehman, all of them, even Goldman. You know, you think Goldman is good? No, they're not good. They were saved by the Federal Reserve. They were saved by Paulson, because Paulson used to be the chairman of Goldman Sachs. So Goldman has to be a bank so that they can be. So please, you have to remember the signs are all there. It's just that a lot of people choose not to see it. Right, so we were just very fortunate because we're market technicians and we can see volatility at the top. We know there's a distribution going on. As it breaks down, you need to step aside, because you don't step aside, volatility will come in. And mind you, you wouldn't know that it's going to be 666 in 2008. Nobody knows that. And that was what we called, I think Wilson C, the Phil Equity guy, basically said that it's a chance of a lifetime. The problem is, and I shared this so many times, if you don't liquidate your position, and assuming you're good already, you sold 50%, and the balance, you just ride it all the way down. Believe me, at the bottom, you will not be able to buy anything because you're still frozen, because you still have 50% left. That's why when markets breaks down, you need to be out of the market. You don't get out of the market. At the bottom, you think you can buy that? A capitulation, mean reversion? Hindi ako naniniwala dyan. You need to be out. You need to be able to, that's the only time you can act. That's the only time you can act. I've seen it so many times. People say they can, I'm out 50%, so I'll just wait for it to capitulate. It capitulates. Hindi mo rin mabibili because I will tell you, it's darkest before dawn. It's so dark. There are thousands of reasons why it's at 666. You will not be able to pull the trigger. No? So you have to understand that. You need to understand that. I've been to so many of these market-driven crash, and I can tell all the stories. But believe me, I've seen my friends who basically at the bottom of the market, and I tell them to buy, they will never pull the trigger. They will never pull the trigger because they still have a position. They're just hopefully that it rallies so that they can get out. That's the sad thing about the stock market, is it becomes very emotional. That during the time that it's collapsing, the desperation is there. Susuka mo talaga yung position mo. Matatakot ka talaga because it's always darkest before dawn.
Okay.
All right. Hope we answer your question, Alvin.
John, please go ahead if you have a question.
Question lang for Ma'am April. As someone who aspires to have a career in finance and investments, how necessary it is to gain the CFA charter holder designation?
CFA. Well, if you want a career, it puts your foot in the door. You know, it's more of that rather than anything talaga. Well, has it helped? Well, yes, I think it has, but I think the requirement to have a job experience is also important. I mean, yeah, you can take your CFA, you can have the skills, but if you don't have the necessary experience, wala ring kwenta eh. So I think the CFA charter puts your foot in the door rather than being necessary to succeed.
Okay. Alvin, did you have another question?
Yeah. So follow-up question now. So regarding market cycles again, has there been a time where you thought it was going to be a bear market, but then in fact it just turned out to be a short correction from a bull market? or are these things generally pretty parang obvious?
Kayo, boss, I think yung pandemic, kala natin sa US, diba?
I can't hear you. April, can't hear you.
Yeah, diba yung pandemic, well, seemed like we were gonna be in a bear market, but the US, it was like V-shaped after the March. But it was the Fed, diba? The Fed action. It was different, diba?
Yes. Juanes, you have someone, no?
It's possible that as much as possible, we don't want to have a very bearish view, or if we are bearish, we're short-term bearish, right? Because you're going against the grain of what the stock market is all about. You invest into companies that are growing, and how long does that stop? Right, so that's also the reason why bear markets don't really last too long, unless, of course, the government does something very, very wrong that puts us in a hole for a very long period of time. So yes, normally when you're looking at a very bearish view, there are people out there who tend to be able to over exaggerate the downside perspective. I don't like that, because I don't like to do that a lot. I did it once and I will not do it again. And only because, like I said, it makes you sit down and realize you're going against the grain of what companies are. Every year a company makes more money means they become more valuable, and that means they should be priced highly. So how long can you keep that on? And economic crises don't usually last, more than 2-3 years. That's already a long time.
I think, Alvin, the cycles are very short now. So you really need to be nimble. Cycles are very short because you have to always remember. That's why the short sellers are always at the defensive, because if you're shorting, volatility will come in, because at the back, you know that the Fed will always be there. Because if there's for example, there's what's called interest rate policy driven crash. So we know that on a policy driven crash, it's probably 10-15% maximum lang yan, diba? So when you're 10-15% maximum and then you're shorting it, the time that you see it already, it's already probably pricing in already, right? So that's why we don't encourage really people to short the market. And if you're shorting the market anticipating, then that's very different, right? Do you understand? Meaning you're going, let's say, for the market is going up and you're shorting, you say, oh, no, this is the top now, this is the top now. Oh my God, you're just basically, those people who shorted Tesla, the last 3 years completely wipe out, right? I mean, you should know that. You just, all of them basically wipe out. They can say all they want that it's overpriced, whatever. They were proven wrong, and the valuations of Tesla is really ridiculous. But then people are continuous to just hold it and still participating in buying it anytime there's a pullback, right? So you really need to be very careful.
Short follow-up question for Ma'am April, like kanina. So you mentioned sometimes you went into a stock too early. So I guess in a more fundamental perspective, supposing you found a cheap stock with good fundamentals, in your experience, what was better, buying things slightly early, but then having more of that upside, or waiting for the price to confirm it and sacrificing some upside? And also considering there's no better use for your capital because the other markets are also down.
Yeah, I guess I'd answer
Remember
it.
your URC?
Yeah. Depends. It really depends. The best would be, to tell you honestly, is kasi we don't have a lot of capital naman eh. So a better timing would enable you to hold on to it for a longer period of time. Kasi the problem is, if you buy it too early and then it goes down 10-20%, so when it rallies, there is always this temptation to parang break even, or ayan, break even na ako. Sige, benta ko na. So yeah, I mean, if you don't have a lot of money, it's better to buy it at the right time rather than, buy it a little early. But I guess if you do have a lot of money, then yun na nga, paipit ka na lang. 'Di ba? Then you'll make a lot, as you said, 'di ba? Buy a little bit early, then you actually have a little bit more in terms of capital appreciation, 'di ba? But then there's also the buying too early because, for example, if yan sa mga analysts yan usually sakit namin eh. Let's say if the market, like Juanes and Boss Edward would say, it broke already the moving averages, it's turning, etc. Usually the analysts what will happen is will already say, oh, mura na yan. This is our chance to buy it. And then yung pala, oops, a change in trend. And then it will go down by, say, 50%. Wala. And then the analyst will become too bearish naman at the bottom. But anyway, that's what happens usually to mga analysts. So, yeah, I guess mahirap ang trabaho ng analyst.
Yeah, thank you.
Okay.
You should have started the conversation that way, April.
But it's hard. It's really hard. That's why experience is important.
But I think April is correct. No? When your account size is small, then you really need to time it properly. When you've got to a certain size, and we used to do those crazy things 10, 20 years before. When there's a capitulation, we will always be too early. I think Juanes, I think you've seen that so many times, right? So it's mainly because we're accumulating. So when we're accumulating, we are always have to be earlier because that's where the volume is coming in. Alvin, do you understand? So when the volume comes in and I want to accumulate, I have to be maybe a few days earlier. But it will scare me also kasi it's a capitulation. Diba? Then haharangin mo eh. So you'll be there. I remember, honest, you came in and you were telling me, boss, why are you buying a falling knife? Mayabang pa ako noon eh. Bata pa ako noon, 20 plus years ago. Sabi ko, well, just let them finish my buying. A few days later, boom, wala, boom. Naubos na yung pera ko, wala na akong pera. No? And then I had to pray na lang. I had to close my computer kasi hindi ko na kaya, volatility, hindi ko na kaya talaga. I was sharing that in one of our trading summit, di ba? Kasi I remember I was buying this stock that was recommended by April. Kasi I asked April, anong pinakamaganda dyan? I remember sabi niya, Petron eh. So Petron went down from 6 to 2 pesos. So I bought it at 2 pesos eh. So Juanes came in. Sabi niya, boss, ano ginagawa mo? Ba't pinapatulan mo itong stock na ito, 2 pesos? Sabi niya, hindi, okay to. Sabi ni April, 380 ang fair value niyan. Sige, labanan na natin yan. So we bought, I think, 150 million shares. Eh. But the problem is, Ayala Land was 8 pesos when I was buying that too. 1 week later, Ayala went down to 4 pesos. Tama si Juanes. If I was not there at 2 pesos, probably it hit 1 peso. So I was just too early. The only thing is I was able to absorb the floating shares. Eh. And then I had to close my computer just to pray na lang. Hindi ko na tinitignan eh. Kasi pag tinitignan ko, sasakit ang tiyan ko. So hindi na ako tumingin. But it dried up na. Nawala na yung selling. Na-dried up na. Yung pala, after 1 month, it went to 380. Kasi it was a lot of short covering. I mean, I didn't know, right? I just believe that April was saying, boss, maganda ba ito? You know, every weekend, when I go to Tagaytay, I have to visit the Petron Select. Eh. I have to, not Select, Petron Station eh. Because that was a new, I was to convince myself that this is the right company that I'm. And I have to lie to myself just to make sure that I don't liquidate it. Eh. I'm telling you, it's really scary. These are really scary. I don't do these things anymore, by the way. Mabait na ako. I don't do these things anymore. But when we were earlier, wala, mayabang tayo masyado. And mind you, it rallied all the way to 6 pesos. A few months later, it did 1 peso. But I wasn't there anymore. I sold it, and then umakyat pa. And then went down. Pero it went down to 1 peso talaga. So these things, nobody knows. Diba? Kailangan magdasal ka lang, mag-awa ng Diyos sa'yo na makakalabas ka. It was in the 46 years of experience in the trading market. You can listen to it. Nandun talaga. The volume were there. confirm with volume. And I remember Juanes came in. Boss, ano ginagawa mo? Buying a falling net. Ako, mayabang pa ako nung dati. Ngayon mas bite na ako. I mean, I'm more, I think because of age, mas matanda na ako, so I'm more careful. Mas matakutin na ako ngayon. All right, okay.
Okay, let's move on to the next question. Gabriel, go ahead.
This is a question for everyone. What qualities do you look for when you're hiring, whether it be for a trader or an analyst? And do you prioritize the soft skills or the technical knowledge?
Chairman, would you like to go
April,
ahead?
you go ahead first. April's a master of this, so let her go first.
You know, I've always been, it has always been my problem. Kasi I like to work with talents. So for me, the work ethics is more important. Because if you think you guys, let's say you can be great in your academics, but if you don't have that open-mindedness and you think you know, like I said, I was making the cuento yesterday, nobody knows. Nobody knows. The market is so dynamic. Every day changes, things can happen. And if you're looking for a career, I'll ask you a question. What's his name?
Gabriel.
Gabriel. So the question we should ask you, are you an entrepreneur, or are you more of a career?
I think I'm more of a career person.
Okay, so you will not be hired by us. You will be hired by us. It's very simple. I asked them,
Think before you answer.
Do you think you're an entrepreneur or you're a career? So if you say career, then your career is with COL. Kasi career sila. Kami dito, puro nagsusugal kami dito. So you have to have that entrepreneurial mindset. Yun ang cheating. May cheating na kayo dito if you're applying. If I ask you that question, it's a very simple question. I just ask it. Kasi all of you guys are good eh. Magagaling naman kayo lahat eh. Di ba? You come from the best schools. Ano school mo? What school are you? Oh, the best schools. One of the best schools. Di ba? I like for CTS. CTS, we need to be more entrepreneurial because you're looking for businesses. You're investing in businesses. So, di ba? So you have to have that entrepreneurial mindset. And then when you work for us, we don't pay. That's the other problem also. So you need to believe that you can make it. Because if you cannot make it, I cannot continue to pay you. You leave also kasi we don't pay. Yan ang problema namin. I cannot pay because I cannot pay. Yan ang problema. April, I remember you told me how much was your sweldo? 8,000 ba? 12,000?
Before, 8,000, but well,
That's your sweldo.
okay lang yun. At the time, that was, I think, medyo, if we compare it to today, mga 25, 30K, mga ganon. That's the present value of it.
You already built in the inflation of that and everything. April,
You
just to see.
factor in.
Yeah,
No.
fair. Today I'm not cheap. I'm fair. Based on April's. I'm fair.
Yeah, but that's it. I know that, for example, the smart kids nowadays, they can command, say, 50 to 70,000 starting eh. So we don't pay that much. Yun lang sasabihin. So yeah, even at COL, we pay a little bit more, but we don't pay a whole lot more to the point that will be as competitive as, say, a PNG or Unilever or, say, the foreign brokers. But I guess what we can offer is, I mean, even if you apply at COL, I guess I want to know first if you're going for a career or if you're more entrepreneurial, no? And if career talagang gusto mo, medyo baka hindi na rin kita i-hire. Kasi, why do I say I want somebody who's more entrepreneurial? Kasi nga, I think one of the advantages we have is we do allow investing and trading, and in fact, it's encouraged. Whereas if you work for, say, another broker, a foreign broker, and you work there as a career, you're not allowed to trade at all. You have to service clients, no? Yun yung difference. But of course, they pay you a lot of money. So yun yung difference. Now, if you really enjoy investing in markets, trading markets, then maybe, yeah, yung bagay kayo sa amin. But if you want to earn a high salary and live off that salary, then baka hindi kayo bagay sa amin. So I also take those things into consideration. And of course, what are your values? Ganon. I don't know. Pag masyado kayong social, parang hindi rin kayong bagay sa amin. I don't know. Anong tingin nyo, Juanes?
I don't know. I have my own work. Although I have to agree with Edward. I mean, my primary thing is I look at the person's work ethic. To me, that's most important. I can train people to get to where I want them to be, but of course, I think they have to have enough raw talent to make things come about. I mean, if that on the top shelf is not present, that's already going to be a difficult stand. But your work ethic is important. Your value is important. I mean, if you have all those three, you're doable. You can come inside and do it. In my side, you can have a career. By the way, of course, as a trader, not as a trader, you are a self-sufficient individual, right? You create your own wealth. So, like I said earlier, it's more lateral, and that's really what you push in. You will reap the benefits of. But for those people running businesses and analysts, you can still make a career out of that.
Yeah, I just want to add lang, no. Ganito na lang, I give you a tip. Not only for COL, but for the other employers. When they call you in for an interview, ibig sabihin yung skills, pasado na kayo dyan. Kasi I'm sure they'll give you tests and then they'll look at your resume, etc.
Yeah.
So when you go to an interview, they just want to see if there's a fit, you know. So I mean, yeah, so when you go to an interview, you have to do your research about what the company does and if you really want to work for them, kung bagay ka ba. So you have to convince them that you're gonna be a good fit. No? Yun yung tip ko sa inyo. So if you really want the job, you can't go there in the interview not prepared. Mostly ganun na lang tinitignan yan kung bagay ka ba or hindi.
All right. Thank you, Gabriel, for your question. I hope that helps you a lot. Let's move on to Abe.
Yeah. So a while ago, you were talking about the housing crisis back in 2008. So, like currently, right now, there seems to be also like a recurring bubble again in terms of the housing market. Like housing affordability is already going up again. It's actually higher than for back in 2006 to 2008. So could this be like an indicator of of what's to come in the future, or what's different this time around?
You're talking about the Philippines or you're talking about the US?
US.
Well, the housing market is always because of population growth, always on it's a very cyclical also. But in the US also, it's like the Philippines. We have a lot of land basically that can be developed. And because of this pandemic, a lot of people are moving out. That's one of the reasons why there is a sudden demand for suburban living. So it's always a cycle. It's always a cycle. So it comes and goes. The biggest, on my personal experience, what we did was we tried to short the housing market in 2004, 2005. And because what happened is that the expansion was going to Arizona, Las Vegas. It was going to all these states that huge vast of lands. And people were buying because prices were going up. People were speculating already in buying the lots and buying the. But what happened is that what people don't understand is that you have to ask if it's their first home or second or investment. Do you understand? Hey, do you have to understand that? No? Because if it's for speculation. It's for speculation, meaning it's an investment. The whole development, if most of people are just buying it for investment, it will become a ghost town. Become a ghost town. So this was, in fact, April, we were together, right? And one of our senior traders was coming that he was buying out in Pora, right? It's a 20,000 pesos per square meter, right? 1,500 hectares. Ayala is developing it, and no need to you don't need to pay 10 or 20%. You just pay a a deposit, and then you can start paying it off for more than 10 years. I think 10 years down payment. But I really believe that that place will become a ghost town, because all the people participating there are basically just because of the easy payment. They're just buying for investment. What happened to me is that I did the same thing in 1995, 96. I was selling all my investments that has gone up so much. And one of my friend said, Edward, let's buy this property in Santa Rosa. That property till today has not gone up. The price has not gone up. And it's beside New Valley already. New Valley is now working 20,000, 25,000. I remember I bought it for 6,000, 7,000. Today it's about 8,000 to 10,000 pesos now. It's the same, right? So any time that you're buying into a development that is an investment, not a first home. If you're buying that, automatically it can be a ghost town. That's the problem, right? So if you you have to. For most of these companies that are developing companies, home builders in the US, it's so easy for them to build a house. I think 3 to 6 months tapos na yan. Kasi, di ba? Standard lang sa kanila. I used to live in North America and I see their development. Mabilis lang talaga yan. So, but it's a pure cyclical. It's very cyclical. Cost of building houses there is cheaper. Unlike in the Philippines, it's always expensive because we're inefficient. So if you talk about construction costs, it's gone up 30, 40% in the Philippines. But in the US, wala. It's just supply and demand lang yan. So there's a surge in people moving out to the suburban area. That's why there's a huge development going on. But after that, bababa rin yan. I hope that answered your question. Or you're talking about from the investment side?
Yeah, it answered my question naman. Thank you.
Okay, thank you for that. Rafael?
I just have a question. When you have a position in a stock, then there is an earning miss or bad news, then it gap down. Do you sell some of your positions or hold your position, especially in US where they usually gap down when earnings are bad?
Very good, yes. Rafael? In the US, we do not participate in earnings. We close our position going to the earnings because it could be priced in, then you have a big gap down or a lot of surprises. So we don't participate in earnings. Did I answer your question? We're always going to earnings. All our traders has to close their position. They cannot participate in earnings. Which is earnings is gap up, gap down. Yan, di ba? You understand? So what we do is that if it gaps up, let's say we like this story, it gaps up. What we do for it to quiet down, then we'll participate, go long. So it's what's called a news catalyst, earnings catalyst. Comes out, it's really great. So it gaps up. We wait for it to consolidate, quiet down, then we participate. Tinatawag nila na gap and go, right? Gap and go. So we participate in that. Most of our day traders uses those news catalysts to participate. So every day the day traders, most of our day traders are what they call the scalpers. They look for news catalyst that comes out. So earnings catalyst, new product, gap up, quiet down in the intraday. We use a 5-minute chart to look for the support area. As it breaks out, we participate. Then we scalp it by the end of the day. So no earnings for us. We stay out of earnings. There was somebody who asked me yesterday, if the stock gaps down, do you participate? I said, we don't do that also, right? Because a lot of gurus basically teach us that. the market, there's a news catalyst, a bad news, it gaps down, then they buy it, quiet down, buy it for the rally. We don't teach that. No, we don't teach that. We don't teach anything that has no, if it's a bad news, it's a bad earnings call, we don't anticipate that it's parang mean reversion siya. It's like a mean reversion, di ba? So the rally is based on that. We do not do mean reversion, capitulate mean reversion on anything that fundamentally has a problem in terms of earnings. Okay, Rafael? Is that Rafael?
Yes, thank you, sir.
Okay, good.
Thank you. Alvin, please go ahead.
Yeah, so my question is regarding the recent Archegos capital management. And yeah, because of the total return swap, parang no one knew that they were that leveraged. So I guess my question is, how exposed do you think the market is to those kind of risky financial instruments? And at this point where everything's kind of correlated or integrated, is it possible that just a few big collapses of those institutions could ripple down into a big financial collapse? Or yeah.
What instrument is that? Is that ARC? You talk about ARC, the Young Growth?
The Archegos capital management. Parang
Which one?
there was
Which is that? Is that the Archegos? No, Bill Huang.
Yes, sir. Yes, sir.
Well, you know, in fact, one of my banker took a hit of 5 billion. Credit Suisse took a hit of 5 billion. And I called up my banker and I said, you guys are so strict with us. How come you are so aggressive with them, right? I mean, these are things now. I think it's really the problem in our industry, in the industry itself, is that because they have a track record, so they are willing to now let them leverage up to 8 to 10 times what they have, right? Today the market is just a lot of fiat money. There's just so much money in the system, right? So a blow up like that is that it's really nothing for them. It's just a 1 year earnings provision. That's it now. Yeah. So it won't affect the market. Before, like I remember, see Nick Leeson on the 1 or 2 billion lang, the whole market started to tremble na. Nowadays wala 10, 20, 30 billion, baliwala sa market yan. So it's very different now. It's very different now.
Quick follow-up question, sir. So, how many other, like, are there still a lot of other risky financial instruments like this? And do you think it could potentially hurt the market in the future if a lot of, let's say, 10 institutions parang, melt down?
I doubt it because you have to remember the experience of Archegos, wala na yan. All of them all the risk manager will be running around to make sure that their books are not much leverage anymore that's going to be provided for all these hedge funds. Wala na yan. Everybody is tightening up already. You can see that. So the speculative issue, and you can see most of those issues basically quieting down already. Diba? So the last was really basically the Bitcoin. I mean, all the Bitcoins, all the alternate coins, all the NFTs, those have gone down so much already, down 50, 60, 70, 80%. There was a coin that dropped zero yesterday. I mean, but they deserve it. Those who participate deserves it. Do you understand? You deserve it because you're buying something which has no value at all. It's just pure speculation. So if you get hurt, I mean, you should learn from it, right? So next time you won't do these things anymore. I mean, I experienced that same thing when I was young, trading all these penny stocks, and I had to learn from it. I've learned the hard way, right? So all these young kids who participate, that's why I never comment on this. I mean, I want you to experience it, because if I tell you now don't buy it. Hey, buy it, and it goes up. Then you blame me for not telling you to buy it. So you want to participate, just learn the rules of the game and know the risk, right? and know the risk. Now, if you put 100% of your capital trading those issues, isang guhit yan, wala ka ng pera, di ba? Now, if you're like a big institution, just put 1% of your total asset, treating it as a diversification of different assets, then that's totally different story, right? And then you just experienced it, whether you participate on something which is, for us, is pure speculation lang yan, eh. Yeah, just. I mean, we can argue all we want that this is going to change. It's going to be blockchain. It's going to change the future. I mean, you can read all you want. As long as it cannot generate value for me, it's speculation. It's just a product for speculation.
Thank you, sir.
All right. Okay.
All right. Next, we have a question from Kay. I hope I pronounced your name correctly.
Yes, sir, that's correct. This is for Ma'am April. Ma'am April, do you believe in sector rotation in the PSE? Thank you in
Oh
advance.
yeah, meron yan. Yeah, they do rotate. It depends really on the sector if it's in play. There has to be a news or a reason why a certain sector will be more popular rather than others. For example, before consumer stocks were in play because, for example, inflation goes down, therefore, the consumer sector will benefit, or say it's election, so mas bagay consumers or media. And then sometimes it will be the banks, or sometimes it will be properties, no? But I noticed that the US would be more, mas may ganon, mas may rotation sa US. Philippines kasi it's very small market eh. Yeah, so right now what's happening is there's a greater interest on more cyclical plays because the economy is recovering versus, say, the more resilient companies like the telcos. So may ganon. And then after the blue chips go up, then they will go to the smaller stocks, no? May ganon siyang rotation na nangyayari.
Thank you, ma'am.
Just for the rotation comes in like this, no? So it's always the blue chips that goes up first. Then as people makes money, they scale up, and then they look for the second liner. Not second liner, but may mga mid caps. And when they make money on the mid caps, then they go to the penny stocks, to what we call the informed specs. So may rotation talaga yan. May rotation. Always remember, it's always the blue chips first. Because once it's an index, once this goes up, it creates a lot of buzz. People comes in, participate, and once it participated, they make money, they sell, go to the mid bargain hunting na sa mid caps yan. Pag kumita na naman yan, pupunta na sa mga basura yan. So may it's a rotation all the time. So like for example, when the speculative issues went down last, I think first quarter or January, February, then naging no interest na, di ba? Right? And the last to come down is the blue chips also, because right, if you study it, the market started moving up in August, September, October, ang daming pera kinikita yan. And then it went to the second liner, then it went to the penny stocks in January, February. Di ba? Kasi people are making money, may pera, so rotate and rotate. Then it took us from January, Feb, March, April, May, June nang nag-recover ng market. So nag-rotate back to the blue chips. So now when you make money on the blue chips, then you're looking for values na. Naghahanap ka na ng where to put your money. That's why you can see the DMC, semi-rara, nagrarally na mga yan, di ba? Like yung so nagro-rotate talaga yan. Then eventually they'll rotate back to the informed specs, yung mga basura stocks. Rotation lang palagi, rotation. Kate, did I answer question? Okay na?
Yes, sir. Thank you very much.
Okay, let's go.
Okay, thanks for your question, Kate. Miguel, please go ahead.
This is for Mr. Wanis. As a chief technical analyst, how do you approach risk? And do you have a hedging strategies? What are those?
Well, in the Philippine market, like April said, we're quite small here, so you don't really have to be too complex into your system. But do we follow risk management? Yes. Any trade that you enter has to be protected, plain and simple, right? I mean, the last thing you want to do is walk around in the street and you're going to walk right over an open manhole and you just sink right in without absolutely any protection. That cannot be allowed. The only reason we survive in security things like this is because we are adequately protected all the time, right? We look at that first before we look at the opportunity for elsewhere, because we have to make sure at the end of the day, our capital stays intact and we're in for the next game. The minute you lose your capital, game over for you. And so you really have to put an extraordinary amount of risk management tools to be able to do it. So follow your stops, make sure you pre-plan everything. You ask yourself your questions today before they happen. For example, somebody asked earlier, what happens to me if, for example, I bought a stock and bad news came up, my stock gaps down? You shouldn't be making your decisions tomorrow after that. You should be making that decision now when you're buying it, right? So for example, I'm buying a stock and I say, if it goes above this, this is what I'm going to do. If it goes below my stop price, this is what I'm going to do. Now, what happens if it gaps down and it goes way beyond my price? You better have a plan of action to resurrect yourself out of that situation. You don't want to be figuring that out then, because at that time, your mind will be extremely emotional and you cannot make any logical decisions, right? So you have to make all that pre-assessment and work done beforehand. And that's the only way you're going to be able to do this with great degree of success. So yes, always follow your stops. You can use your trend lines. You can use moving averages. You can use previous lows. You've got little simple tools you can do that you don't have to be a rocket scientist to be able to follow, and do follow that.
Okay,
All right.
thank you.
Hope that answers your question, Miguel. Danny, please go ahead.
Hello. Okay, so I guess for my question, I wanted to know your insights on how the mining industry or the mining sector is in the Philippines, especially since parang a lot of the basura stocks are in that industry. And the recent news about yung AR suspension. So what are your thoughts on that?
Uh, you know, in the 90s, the stock that we did very well are all those penny stocks, all those mining stocks that which we speculated. The problem today is that the policy of the government has always been, in a way, it's anti-mining. Anti-mining in a sense is they're anti-open pit mining. And because of that, a lot of these foreign investors, foreign mining companies that have signed contracts, let's say with Lepanto, Manila Mining, Pilex, they've been here the last, almost 20 years na rin eh. But nothing really happened because they couldn't get the permit to see this through. Now they're opening up. Basically, I don't even understand why they're opening up, because the problem is that when you open up and then the new administration comes in, then there's a change of policy again. So I've always been very worried about our mining industry. So the only companies that I think that is exciting enough is really the Pilex Manila Mining joint venture, which is the Silangan property. Hopefully, after more than 10 years, it can be started. It can be started. There are a few good. The Philippines is always good in ano. There are a lot of mining sites that are very interesting. The problem is the government. They keep on flip-flopping, right? Because of what they don't understand is that most of the small-scale mining. In fact, this was shared to me by one of the governor in one of the area and he was telling me that I think we were on the same table. When we invited this congressman to talk about the mining, and he said, what's in it for them? Because the proceeds of the mining, when they go in, the proceeds goes to the national treasury. It doesn't really, there's no how do you say this, sharing in the local government side. So a lot of them don't really want it to happen in their particular, because there's nothing, they don't get anything. It all goes to the national treasury now. I think that was, I pretty remember that. I think were you there, when he was sharing that with us?
I don't remember, but definitely that's an issue. And now they're actually trying to tax the mining companies more. I mean, yeah, we're open, but we're gonna tax you some more. I think
They're
that's
just
the issue.
they're looking for way of taxing it. Sayang talaga ang Pilipinas kasi the policy on mining, if it was always if it was written down well and supported, the Philippines is a beautiful area for a lot of opportunities here for the mining sector. It's like Indonesia. Indonesia is the same thing. Their policy is good. So most of these Indonesian companies, like all the big boys are there. Freeport McMoran is there. All of these valleys there. For the nickel, for the copper, big development. That's why most of their stocks has gone up so much. Kawawa lang talaga ang Pilipinas because of policy. It's a policy problem talaga. So hopefully, kung totoo ba ito, kasi alam mo, next year, election year na yan. So they might just open it up to get some money from these people. And then eventually, bahala na kayo for the next administration. I'm not saying bad-mouthing but this should have been opened long time ago. Dapat should have been opened long time. And I think I was with Coca Alquas when I was being interviewed. I said, what our government don't understand is that today, if I want to buy a copper company, I can go to Indonesia, I can buy it out of the US market, right? I mean, all these, there are so many companies that's listed there that I can participate and make money, right? If I think that gold prices is going up, copper prices is going up, I can participate. I don't need to be in the Philippines anymore as an investor. But as an industry itself, the government really has to decide, because the problem is, let's say in our area, let's say if there's a powerful, let's say, I'm not saying religious organization, they're anti-mining. Maraming anti-mining naman talaga dito, di ba? Right? It will affect the environment, right? But what they don't understand is the big mining companies, you can run after them. It's the small-scale mining that basically destroy the environment, di ba? So that's what they don't understand. They allow the small scale, but they don't allow the big ones. The big ones is the one that has all the mining plan to make sure that there's reforestation. They will do so many things. But the small scale mining is because it's run by the local government. Parang Parang they're in cahoots with the government, the local government. I mean, I don't have any proof, but I assume that. That's why there's still a lot of these local mining companies, the small-scale mining companies that are basically destroying the environment, right? Yan ang biggest problem talaga. So there is no alignment between the national government and then the local government, the provincial, to make sure that all these things are in play. I hope but there are opportunities. There are opportunities right now. I think Felix just announced it. They're looking for opportunities. I think Felix, just today or yesterday, I saw the disclosure from Felix Mining. They're really looking to develop the Silangan mining. And then because of the high prices of copper and gold, it's delaying now the mine life to a few more years. The old Padcal mine. I was there in the early 80s. I visited the Padcal mining. I also visited Lepanto mine. I visited a lot of minings. Pinuntahan ko lahat yan. Because those were the days that we're in. The mining is the play. Mining play lahat yan. We're good?
Yeah, okay. Thank you everyone for your questions. Thank you, Danny. We have one last question to wrap up this live session. It's from RJ, and I think this will be beneficial for a lot of people. He said he's asking, did books help you grow your skills in trading / investing? If so, what were these books?
Honest.
What was the what word?
They what book for you to become a good
Books?
trader?
Did you say
Yes.
books?
Yeah, books.
Oh well,
Just
when
read
we started, remember Edward, there really wasn't much books yet. Unlike today, there are just so many already that's coming out, and we started with our Jesse Livermore books, our McGee. We had John Murphy's book on the technicals, but we didn't really have a lot of the new ones today. Today, you've got a lot more experienced traders that are coming up with that. So you might want to be able to review already a few more. But I don't think you can do without it. You need to know your classical. I mean, if you're going to go to trading, you need some classical frameworks to be able to begin with. So whether you're the type who can stomach a book like Martin Pring, who's to me is one of the most dreariest authors who write technical analysis, or John Murphy, plain as day, you can go through that. And of course, psychology books, I think, will also play out later. You don't have to read that in the beginning because I don't think you can empathize with it until you start trading yourself and you get into the degree of understanding that you would need to read some of the trading psychology books, because later you probably would need that, like Trading for a Living, for example.
April, have you ever read the technical analysis book?
No, no.
It's an inch and a half. It's only an inch and a half wide, April.
Well, I tried, but the problem is kasi if you don't apply it, diba? You forget it. So yeah. Well, for me, yun nga, yung mga recommended books ni Boss dati. Yung by Peter
William
Lynch.
O'Neill and
Ayun, yung mga ganun, mga Can Slim. Ano nga ba yung si Can Slim? I don't even remember that. Yeah, and then of course Warren Buffett. But sabi niya, ako old school. And then of course for analysts, our favorite is Aswath Damodaran. But then you can watch his lectures online. He's really good. Yeah, a lot of them are actually available online, and then they're in shorter chunks, so easier to consume rather than yung mga books, di ba, na haba eh. So kami, we're more of right now we watch more YouTube videos and yun, mga online resources.
There's a lady there on the right beside me. Who's that?
Yeah.
Danny, you're a market technician. What book did you read?
The Trading Code by Jason Kang.
Yeah, very good book. Yes. Okay, so what else?
The technical analysis financial market. I forgot the author, but it's a thick book.
Okay.
John Murphy.
Oh, yeah.
Yeah, I think nowadays, I mean, you can learn from us next week. It's all about technical analysis. Like what Juan said is correct. I started with classic charting. In fact, if you think about it, it's not as difficult as it is. Now we have gone through the whole process for the last 30, 40 years. And we're putting it in a nutshell, basically. It's just that you have to trust us that we're sharing with you our experiences. The other day I was talking to my grandson, and I asked my grandson, I showed him a chart. I said, what is this? Is it going up or going down? He said, it's going up. I said, oh, so great. Then I showed him another chart. He said, what is this? Is it going up, sideways, or going down? He said, sideways. Okay, great. So even a 13-year-old kid basically can understand uptrend, sideways, downtrend. So you need to understand the market cycles now. No? It starts from a neglect, which is quadrant 1. And start marking up, that's quadrant 2. Sideways distribution is a quadrant 3. And then the quadrant 4 is basically a downtrend. It's really that simple. You just have to look at it and try to decide, is it an uptrend, sideways, downtrend? That's it. And you use your fundamental analysis to compute. If it's expensive, that means it's a distribution. If it's cheap, deep value, it is accumulation. Ganun lang. And then learn how to do it the right way. So learn your fundamentals well. Learn whether the market is going up or not. It's not that difficult. It's not that difficult. I mean, we make it difficult because we're like gambling every day, right? But if you look at the major indices, you can see already. Nandun na yan, nandun na. Parang simple, no? Honest, parang simple ba? Tama ba ako?
Simple lang yan. Simple lang yan.
Ganun lang, ganun lang. So in other words, don't make it complicated. Don't make it complicated. It's all there, right? From an accumulation stage to a markup, distribution stage to a markdown. And then it goes around and around and around. No? So what you need to do is you have to understand where you are. That's why we show you the market cycle, the boom bust cycles, the market cycles, so that you'll be able to determine. For example, who's trading crypto? Maniwala ako, wala kayong hindi nag-trade ng crypto. Jordan, nag-trade ka ba ng crypto?
Oh, I don't.
You don't? Oh, sino nag-trade ng crypto? Guys, I'll ask you a question. What do you think? Si Danny. Since you're a market technician, you look at crypto. What is crypto now? Is it in a quadrant 1 or is it quadrant 2 or is it quadrant 3 or quadrant 4? Where do you think? Simple quadrant 3. Huh?
Quadrant 3.
Who answered that?
Natakot mo, boss, ha?
Tama naman eh. It's quadrant 3. That's correct. Kasi after the sell-off, quadrant 3 na yan, di ba? Right? So it's a weak bull na. So people are bargain hunting, try to buy, mura na ito, mura na ito. It's down 50%, sige, mura na yan. So that's basically quadrant 3. As long as you know it's quadrant 3, then it's what's the strategy of quadrant 3? Who's the guy that answered that quadrant 3?
Frank Cabrera.
Frank, so what is the strategy of quadrant 3? Wala. Danny, ikaw na lang. Tulungan mo na lang si when you see these things, what do you think? Right? If Juanes will say it's an A, then a B, and probably a C, right, Juanes? So now we're going to the A pa. Nasa A pa yan. A, 1, 2, 3, 4, 5. Diba? So it's quadrant 3. The only thing is we don't participate in it. It's because why? Why is it? Why is it that we don't? Because there's no intrinsic value. So if I participate, it's just gambling. That's why even if I think that it's going to be a buy low, sell high, I don't participate. Ganun lang yan. But at least alam mo kung nasaan ka, di ba? Is it you're the quadrant 1, quadrant 2, quadrant 3, quadrant 4? Ganun lang yan. Quadrant 1 is accumulation stage. Quadrant 2 is a markup stage. Quadrant 3 is a distribution stage. Pag breakdown, quadrant 4. Strong bear. Ganun lang. If you can understand the market cycle clock, that's it. Then you use your strategy na. Is it a buy low, sell high? Is it a buy high, sell higher? Ganun lang yan. All right? We're good? Thank you, Juanes. Thank you, April. I know you guys have another session later on this afternoon, 4 o'clock.
Well, thank you for the opportunity. Nice to talk to these guys.
Okay.
All right.
Let's wrap it up. So thank you again very much to our panel for today for your insights and for your time. And also thank you to everyone for attending another one of our special Friday events. We hope you all enjoyed it. We prepared one more special event for you guys next Friday to end the bootcamp, which I guarantee you will not want to miss because we're going to be playing games. We're going to be giving out awards and cash prizes also. So please stay tuned for that. Just another reminder that our next seminar will be on Monday, June 21 at 10 a.m. Back with a morning with the chairman for the final time. So again, thank you to everyone. Enjoy your lunch. Have a great weekend ahead, and we look forward to seeing you next week for the final week.
Okay, thank you.
Okay, bye.
Stay safe.
Thank you.
Bye.